Well, my takeaway from that very juicy discussion earlier on is that cultivated meat could be reaching our plates sooner than we think. And we gotta say cultivated meat, right? It's no longer lab grown meat. It is, however, a rather expensive proposition, and so I think it's only apt that our next and final panel dives into the investment landscape for agri-food tech. Assessing the agri-food tech investing landscape, where are we in the hype cycle? Here to answer this question, we've got Andy Ziolkowski, Managing Director of Cultivian Sandbox and co-founder and managing partner of Cultivian Ventures. Prior to founding Cultivian, Andy had over 30 years of experience in venture capital investing and merchant banking across a broad range of industries at SAE Ventures, Forest Street Capital, and Credit Suisse First Boston Merchant Bank. Joining us from Switzerland is Przemek Obloj, managing partner at Blue Horizon. He is responsible for Blue Horizon's investment activities and brings more than 15 years of investing experience from leading global organizations, including CVC Capital Partners and EQT Partners. Prior to joining Blue Horizon, he was the managing director and head of European private equity at PSP Investments. Rounding up this panel is Anuj Maheshwari, Managing Director of Agribusiness at Temasek, which he joined in 2004. Anuj oversees Temasek's investments across the agri and food value chain and is also Managing Director for the Middle East and Africa. He's also a board member on Seva Sante Animale, Tana Africa Capital, and Temasek Life Sciences Accelerator. Moderating this panel is Preston Zhang, Executive Director, Corporate Development at Pinduoduo, where he oversees investments and strategic partnership activities. Before joining Pinduoduo, Preston spent over 6 years in private equity investment at GIC, investing in leading internet, technology, and healthcare companies in Asia. Before his career in private equity, Preston was an investment banker at Goldman Sachs and JP Morgan. As before, if you have any questions for the panel, please type them in the box to the right of this video stream. Over to you, Preston.
Thank you, Xinyi. Hello, everyone. Thank you so much for joining us. I'm really honored today to be joined by 3 top agri-food tech investors in the space. So before we really start, let me set the scene. Right? So I think it's needless to say that agri-food tech is a really vibrant investing space today. Just by an earlier report by iFounder this year, in 2020, we saw over 2,700 deals totaling over $26 billion worth of investment just in this space alone, right? And we are seeing a lot of interesting activities going on. We're seeing more people entering this space for various reasons, be it sustainability, social responsibility, tech disruption, financial returns, and etc. At the same time, valuations are getting higher, and some of the spaces seem increasingly crowded. And as an investor, when we are trying to understand what is going on today, we often look in the past to see if there's lessons that we can learn from the past. So without further ado, I will maybe direct my first question to Andy. Andy, we all know that Cultivian Sandbox is one of the first agri-food tech focused VC in the entire world. And given your decades of experiences, maybe you can kick off our discussion by sharing, maybe have you seen similar trends and enthusiasm in the space before? And what do you think is different this time?
Sure. And Preston, thank you very much for including me in this panel and this wonderful conference. So when Ron Musin and I started the first fund, we met in 2006 and talked about the opportunities. Back then, there were quite a bit of innovation like there is now. Most of it that we saw was in traditional ag tech, less so in food tech. But there really weren't any institutional investors that would lead the first round of investment, Series A round. And that's really what caused us to say there's an opportunity for a new fund in the space. And so at the time, I think people didn't look at food and ag tech as a sector for investing, certainly not in venture capital. There were corporates that did some investing, some of the big ag chemical companies, and some individuals. But there really wasn't anything in the U.S. for sure. And that's what caused us to undertake this effort back then. We raised the first fund in 2008. And when we were talking to institutional groups about investing in our fund, they called it a niche. Eating and providing food for the planet, I would argue, is not a niche. I think we've discovered that now. But it's when we started, I think there was some skepticism as to whether this would actually grow into a sector. And I think over the last, decade plus, it's evolved, I think, and a lot of it, in my opinion, has been driven on food tech, which we saw as a sector, but it wasn't as dominant as it is now, by the consumer. It's the power of the consumer that's created this in many ways, along with technology. But if it wasn't for market acceptance, I think it would be difficult. So I'm delighted that it's grown, and I'm delighted that there are other groups out there, because I think there are a lot of deals and a lot of technologies that deserve funding and an opportunity to launch. And so that's the trends we've seen since we started over a decade ago. Thanks, Preston.
Thanks, Andy. I like that. I like that you actually started with agri-tech, and now you are seeing more innovation in the food tech space. And speaking of food tech, we all know that Blue Horizon is a reputable investor in the food tech space. And Zhang, welcome to the panel. And first of all, I want to congratulate you guys for the recent launch of Live Kindly Collectives in China. As a consumer in China myself, I can't wait to taste out the products. So I guess one of the things that's unique about Blue Horizon is that you guys are not only investors, you guys are also entrepreneurs yourself. So can you maybe share a little bit color with the audience? What are your thinking behind it? Why are you doing both at the same time?
Sure, very happy to. And thank you very much for inviting me and sharing this panel with you, Anuj and Andy. We are investors first. So we look at ourselves as investors who are trying to facilitate or accelerate the transition to sustainable food. But as with many other kind of early stage sectors, sometimes there just isn't anything to buy or invest in. And that's when my colleagues started building some of those businesses. So Live Kindly was really, you could call it a buy and build strategy, but it started with very small businesses that were put together and then supersized. So to use the food, probably not a good quote from McDonald's in this forum, but they were supersized to create a global company and hopefully a global leader in the future. But we will always try to combine the DNA of investors and entrepreneurs to support our companies. So if we invest in a business which is already sizable, we'll deploy the same resources to help them grow.
And I guess being entrepreneur yourself, you probably understand the pain of some of the companies that you invested in as well, isn't it?
Well, I would like to think that, but I think until you're an entrepreneur, you don't really realize how tough it is. So we certainly are sympathetic to a lot of the pains, but I think every company is different. Every entrepreneur fights their own battle, and I can only have nothing but appreciation for people who are making it happen day in, day out.
And speaking of entrepreneurs and also the strategy that you mentioned about buy and build, I want to turn to Anuj. Anuj, Temasek has definitely been a super active investor in the agri-food tech space. We've seen your investment everywhere from very early stage companies and incubating companies all the way to, seems that you guys have recently acquired Riverless, Israeli company in the irrigation space. So I'm curious, if you were to frame Temasek's investment strategy in agriculture and food, how would you think about it? Maybe you can share with the audience.
Thanks, Preston. Very happy to. So for Temasek, as an investor, it's very important that we make financial returns, but we do it in a very responsible way. and we do it in a way that brings value to all stakeholders. And that stakeholders obviously include the planet, it includes people as well. So we identified in 2013, which is when we started this group, that agri-food sector is potentially one of the sectors where you can have impact while doing sustainable investments. And impact is obviously very important because 40% of the people work in agriculture around the world, 70% of the land gets used in agriculture, 70% of the water gets used in agriculture. So there's just so much impact when efficiency is brought into agriculture, and obviously it improves lives of people along with it. And then as the sustainability debate has taken more steam after the Paris Climate Summit, and we can see all countries, including obviously China, which has taken a big goal of being net zero by 2060. Food and agriculture is at the center of it. I mean, frankly, if you can solve two issues, how we produce energy and how we produce food, we can all get to a net zero target. It's probably not as simple as I'm making it, but it is achievable by doing those two industries per se. So that's why Temasek got into it. And when we got into it, we saw that technology is really a catalyst to bring about change. In the early days, I mean, Andy, you've been there since the beginning. Food and agriculture is really seen as a commodity business. It's seen a very high asset play business. Most investors don't see it as a technology play. But that's where our lens was very different from others, such as big endowments and corporations. We saw this really as technology underlying it, and that's why the topic that you have on your overall conference of a resilient food system with technology resonates to Temasek extremely well. So now coming to, I was answering why we are in the sector. Coming to how we invest in the sector, as Temasek, we do not have funds, so we have the flexibility to go across different asset classes. I look at our strategy as threefold. We invest in highly innovative early stage companies as early as Series A and onwards. In fact, in certain cases, we have actually gone even before Series A. We created a company called Unfold along with Bayer, where we founded the company along with another corporate entity. So we're willing to go quite early as long as we see a big TAM, a good management team, and a clear path to creating value over there. So that's our first strategy, which is our early stage venture capital strategy. Our second strategy is that of growth capital. This is where we invest in mid-sized companies which are cash flow generating, which need capital either to grow or to acquire companies. This is more traditional private equity play for Temasek. Companies which could be in the range of 50 million EBITDA, going much higher than that as well. We would take minority stakes in the company, and usually the biggest benefit we bring to these companies, besides capital, is helping them think through international expansion, creating scale. So we've invested in animal health companies, for example, one in France called Siva Sante Animal. It's a leader in animal vaccines, and many other companies like that. And the third part of our strategy is that of investing in public market companies, where we would take a small stake, sometimes usually a minority stake, but in the case of Olam, we have a majority stake, where we will buy into these companies. These companies tend to be much larger, much more stable in terms of their business model, and we really see that as a proxy to how the sector is developing. So those are the three things that Temasek has done. We have over 45 investments in this sector. We have invested over $5 billion in the last 5 years alone. And for Temasek, this is definitely one of the sectors that is high on our priority list.
Thank you, Anuj. I really liked 2 points that you mentioned. One is that you are saying that you are investing to benefit all stakeholders along the line. I think we do echo with that. One of our key value is to benefit all. So I think everything that we do, we're trying to make greater impact that could bring value to all stakeholders along the value chain as well. And to that specific point, I think you also touch upon impact investing, right? So this is a question that I want to discuss with the entire panel as well. So maybe we can start with Andy. So when you are looking at a specific investment, what kind of impact do you hope your invested company or your portfolio company can help to achieve? And how does that come into play during your evaluation process? Does it mean that when it's a huge impact, I can sacrifice a little bit of the financial return I'm looking for? So I'm gonna start with Andy, and then we can go around for this topic.
Yeah, thanks, Preston. So when we started the fund, just to put this into context, impact was not something that was considered, and not considered by many investors in general. But there was a bit of an epiphany maybe about half a dozen years ago when we were looking more broadly at the areas we invest in, such as water, such as dealing with food waste. For us, these were areas, opportunities to invest. But all of a sudden now, investing and working on solutions to deal with mitigating water use, for example, is now considered part of impact investing. In part, this is what we've been doing in general for over a decade. Now it's clear we're providing another lens, and we've added to our team over the last year to bring in individuals who can really study this in more detail. I think a lot of the people that we've been investing with are now using the lens of ESG and impact investing. And so, you know, the challenge is really to figure out ways to migrate away from, for example, you know, pesticides and chemicals to biopesticides, using and conserving inputs, and also dealing with labor. Labor is a big challenge. I mean, 60% of the operating budgets at most companies are spent in labor. So how you effectively use labor, do it well. And then lastly, food waste, which has been an area we've looked at for, as I said, from the beginning. And it's clear that if you can reduce food waste, because 1/3 of the food that's produced, whether it's pre-harvest or post-harvest, is wasted. And so there's protein value and ways to find technologies or apply technologies to use food waste, for example, for fish meal or other areas. Those are the things we've been looking at. And so, yes, we're spending more time, we're adding to the staff so we can look at and evaluate it. Obviously, we're return on investment in VCs, so that's critical. But for us, the importance of impact investing and sustainability has grown over the years and will continue to grow. And I think it's part of the DNA of the fund. That's how we started in part. So, and we'll continue to do that. So that's how we look at it. Preston.
All right.
Maybe I can get over there, Preston, talking about impact and sustainability, just to build on Andy. You know, if you're an investor in Agri-food, by default, you're having massive impact. Assuming you're investing in companies that are focused on resiliency, that's focused on environmental sustainability, and that are focused on doing things in a more efficient way. So it's really, there are impact investors tend to measure impact. As an agri-food investor, we try to back companies which bring stakeholders along with them and do a good job at whatever they're doing. And impact is generated automatically. We are investors in a company called Appeal, where, you know, the company is focused on improving the shelf life of food, of fruits and vegetables. But the impact of that, of course, is that the wastage is less. So we are not investing because of wastage. We are investing because they provide a service to consumers that consumers are ready to pay for, and big retailers are ready to pay for. So anything and everything you look in food and agri has impact. Now, sometimes things have adverse impacts. One thing is good, and something is not so good. And that's when the tricky part comes in, is how do you balance different social, environmental concerns that come along with it. And that's the trade-off as an investor you need to constantly think about and make. But by and large, this is a sector where when you invest in companies that are doing a good job, are generating impact at the basic level. Every company in the agri-food sector is generating impact because they are making food available to people 3-4 times a day. And that's something that we take for given today because we have enough food, but that's not always been the case, as we all know.
Thank you, Anuj.
If I can-
Zhang, do you want to add on to that?
Yeah, I actually want to take Anuj's point and push it even further. Look, every company has impact, and every investment is an impact investment. And we just get to decide if we will just do those that have a positive impact, or if we will actually accept destroying something just for the financial gain. And to me, being an impact investor is just acknowledging that the financial metric that we have historically used are not perfect. And that there is an awful lot of things that, when we were back at university, were called externalities, which are no longer external, because we just don't have a planet which is big enough so that we can just take stuff which is negative or adverse and throw it overboard and ignore it, because it's coming back to us. So we are absolutely impact investors. We only invest in companies which promise attractive financial returns, and you have to generate financial returns because the number of investors who are actually willing to back you if you don't is small and will dwindle over time, but also companies which create positive impact, and that impact could be across human, animal, or planetary health, or a combination of those. But there has to be a tangible proof, and we're obviously working on becoming much more scientific, much more precise in how we define it. Hopefully in a few years, you will have the impact metrics which will be as precise, if not more, as our financial metrics today.
Okay, Zhang, can't wait for that new metrics to come out. So maybe the 4 of us can sit down together and discuss what metrics that we should be using when evaluating a new opportunity, huh?
We'll need more time than an hour.
Yeah.
All right, Andy, maybe to shift gear a little bit. I know you guys started off with ag tech, but you are also shifting towards food tech. So I think extension of the question that Zhang brought on was also the different metrics that we are using when evaluating a company, especially considering the impact that they are making. But I think the underlying assumption or the underlying metrics that when we are looking at a potential of a food tech company versus a potential of an ag tech company can also be quite different. So maybe you can share with the audience from your perspective, what are the key metrics that you are looking for when it comes to an ag tech company or versus a food tech company? Is there commonality between the two that you always look for?
Sure. I mean, obviously the basic due diligence metrics about total available markets, all that are critical for sure. But I think one consideration, especially in ag tech, is adoption. Farmers by nature are conservative. And so I would say that adoption of new technologies, especially as you look at the growth of digital or precision ag technologies into the farm. I think the concern, is as we evaluate these businesses, are farmers going to buy it? I mean, it looks great, and it could be developed by a very sharp software developer from Silicon Valley, but when he takes it to a farm in Salinas or in the Midwest, and the farmer has to actually write a check to buy a product, will he? And so understanding that for us is a big factor in evaluating. And then when you deal with inputs, regulatory considerations are certainly huge. Understanding time how is it going to be regulated? Those are big questions in ag tech, maybe less so, and you could argue than you see in food tech. Now, for food tech, we're spending a lot of time. We started out focusing on B2B products. And I think the challenge, as you look at whether it's the plant-based or cell-based, is scale. can companies take technologies that were developed on the lab bench and scale it up and provide products that are commercially viable at prices, at costs that make sense. And so understanding the scale-up costs for us are a big deal. So that's what we tend to focus on, one of the big factors. And obviously, market acceptance. I mean, clearly, if it's a new product, how quickly will it be used? If it's an ingredient incorporated by some of the big guys, or if it's directly B2B, what's going to be the acceptance there? So those are some of the areas that we spend time on, and what differs between food and ag tech in our evaluation. People is a common denominator through all, as you can appreciate too. Thanks, Preston.
Przemek, I want to pick your brain on this as well. Do you agree with Andy? I know you guys are no longer just focusing on food tech, you're also venturing into ag tech. So maybe you can share your thoughts on this?
Yeah, so I absolutely agree with the fact that some of the time scales are a bit longer. And I came into this space from kind of mainstream healthcare and tech investing. So my last deal before joining Blue Horizon was Snowflake. So yes, we're not seeing many companies which have 300% growth rates here, but we're seeing companies which have very robust kind of high double-digit growth rates. Absolutely. And conversely, they tend not to disappear overnight. So I think we just need to adopt a slightly more patient solution. Farmers are a conservative bunch for all the good reasons. I was very, very thrilled when Andy referenced a biological crop protection as an interesting area, because we just invested into a company doing that. But I think ultimately technology will disrupt this industry just like it has with others. And for that, it needs to bring the benefit to everybody, to the consumers, to farmers, and hopefully to the broader society. And it has disrupted industries which said before, oh, it can't be done, digital doesn't work here. We're different. And one after another, those industries have been disrupted. I think it's time for food and agriculture, because we can do it much more efficiently than 10, 20, 30 years ago. So I'm super excited about potential of technology within our space, and whether it's food tech or ag tech or how you define it. I think the aperture will be opening, and we'll be seeing new and new areas that actually will become dramatically more efficient as a result of technology.
Thank you. I think both of you mentioned the concept of patience here. It seems that we are definitely more patient nowadays. And we do have a question from the audience that's on a related topic. And I want to start with Anuj on this one. So Mary Kate asked about cultivated meat. In order for us to decrease the cost of the meat and make it commercially viable soon, the lifespan of investment returns would have to increase. So what sort of timeframes are you looking to invest over? So I will start with Anuj, and I'll come back to Przemek and Andy for this question.
Preston, so as Temasek, we have obviously a benefit that we have our own capital that we invest. So timeframes we are very patient in terms of timeframes. I think from a specific point, I think cultivated meat is certainly early in its journey, but I would not be surprised that technology development happens much faster than what we think today it will happen at. And the customer adoption also happens much faster. I mean, we invested in Impossible Foods in 2015-16. The company had zero revenue. You all know, the numbers are beyond, and Impossible isn't far behind that. I mean, these companies have grown. Of course, they're not cash flow generating today, but and the market loves the story. So what I'm trying to say here is that I think technology development will be faster, adoption will probably be faster, and capital of all sorts of will be available, including public market capital. What this does is that this allows companies to take on very ambitious projects and go for it for a longer term. As Temasek, we are definitely going to be part of the journey of the companies that we have backed. But what's important is a significant group of investors see that, and different kind of investors, not just venture capitalists, but late stage investors, public market investors, endowments, and so on and so forth. And that's the only way we can generate companies which are willing to change the paradigm of how we produce food. So that would be my answer to that question.
Yeah, I would be equally optimistic on that, because there are other industries with long development cycles. Anybody who's ever tried to do anything in pharma, develop a new drug, knows how long it takes, or how long it took before mRNA technology really matured. So I think the market, and particularly the private side, is reasonably good at valuing interim steps. And so while there's clearly a point to be made that cell-based or cultivated meats are further out than plant-based or fermentation-based or any kind of hybrid products, that's just a fact of life. I don't think the fact that we think today that these products will be commercially viable and at cost parity in 10 years, which is roughly where I think we internally at Blue Horizon think that, it doesn't mean that these companies won't be very valuable before that. And just like Anuj quoted, Blue Horizon's success has been largely built on early investments in Beyond Impossible and a few other firms like that. None of them turned $1 of profit, but they weren't bad investments. So I hope we'll find many more of those, and hopefully in 10 to 20 years, we'll have a portfolio with many more cash-generating businesses. But for now, the story is that of secular growth, and I think we can make very attractive returns backing companies that are just creating a new industry overnight. And there's enough capital from sources such as Temasek and similar firms to grow these companies into phenomenal scale.
And Andy, do you want to add to that?
Sure. Yeah. So I agree. I will second what's been said about the optimism that we have about these sectors. And clearly the successes of Beyond and Impossible show that, as was said, that you don't need to be profitable to be a successful investment. I think where we're spending the time is really looking at the picks and the shovels required, whether it's fermentation capacity or technologies to enable these companies to really produce. I mean, you're not going to be using, in some cases, farm fields. You'll be using fermentation tanks. And so production will be different. And so one area that we're thinking is, can we be a participant there in the picks and shovels piece, which I think is going to be critical as demand grows for these products over time. And that's the part we see. But as far as the growth, as I said earlier, I mean, it's the power of the consumer that's driving this. If you don't have someone buying the product or interested in buying the product, this won't take off. And when I look at my children, my grandchildren, I mean, they're all very interested in leaning towards better food, healthier food. Those are the trends that are going to drive this. And I think you're going to have to produce it. And so hopefully we can be in a position to provide those picks and shovels. And that's an area we're looking at very actively right now for investment.
Mm-hmm.
Thank you.
Thanks, Andy. I think we all touch upon a very interesting topic of alternative protein. And in this space, I think there are a lot of new brands that's emerging. Some might be global, some seems to be more localized. So when it comes to consumer taste, we all mentioned that investing is about meeting the consumer's demand, ever-changing demand. So how do we actually think about meeting local? When it comes to food, it seems it's more localized and different. When it comes to different regions, people may have different tastes. So when we think about alternative protein, do we see potential for global brands to emerge or more regionalized brands? So I will start with Anuj. You want to address this question first?
Yeah, look, I think it's a great question. So food is not, is a very local topic, and local flavors that come into it, and local preferences that come to it. But so I look at, the alternate protein space in two kinds of companies. One are platform technology companies that produce a certain ingredient or a certain way of cultivating meat, and so on and so forth. I think these businesses can be global. There is benefit to scale. There is benefit to being able to innovate as well. And then there are certain businesses which are customizing the products using food technology more closer to the consumer. They're producing products that can go ready to eat or in a certain format that appeals to local tastes. We all know in Asia we have very, very peculiar taste of things, which is very different from Europe or US for that matter. So there will be two kinds of companies that come out. Of course, the alternate protein space is wide enough in terms of it being plant-based, cell-based, insect-based. Now you have companies which are producing protein from natural gas, a company like Calista and so on and so forth. So there's a lot of sources of protein, but then there's the core protein, and then there is how do you customize it to the kind of food that customers want. So I really think it's going to be a very, very big playing field. It's probably, yes, some very big companies will come out of it, but there's going to be space for many small companies as well. That's why when people ask me, is this space very fragmented and all of that, I believe fragmentation is good because small companies who innovate closer to consumers will take the product much deeper in that particular segment as well. So that's how I look at the alternate protein space.
Anuj, maybe just a follow-on on this. I really like what you mentioned, but would you bet your money on that there will be another Coke or Nestle emerge out of this trend?
Yes, I think there will be fairly large companies emerge out of that, which will play multiple different platforms. But the food industry is inherently fragmented as it stands today, right? We all know even a big company like Nestle and Unilever, from a global market share perspective, doesn't have that large market share. But yes, I think companies like Beyond and Impossible, who have early leads in this sector, will probably have the highest chance of being able to develop into mega, billion-dollar businesses.
Mm-hmm. Przemek, do you have anything to add on that?
Yeah, so I think what we will see is an emergence of a tech stack. So I think in a way the early entrants, the Beyond Impossibles of this world, will become a bit of outliers because they kind of had to do everything themselves because there wasn't an ecosystem around them. So they had to do everything from engineering the biology of heme to delivering the paper boxes. They're just extremely inefficient in most industries. So I think what we will see is similarly to tech stack, we will see different layers where different companies will play, and they will just use input from the lower layers into their product. So to go back to your original question, Preston, I think the consumer-facing end, with very few exceptions, will be probably pretty local or at least regional. I would struggle to see emergence of a huge number of global brands because I think that really requires a unified product, and of those there are relatively few in the food space. But underneath that, which Anuj referred to as plumbing, but basically underneath that, there's a number of layers that obviously have huge economies of scale. And whether it's just basic technology and the IP that comes with it, or whether it's processing those protein sources, until we come up with much cheaper ways of decentralized protein growth and extraction, I think you could well see that there will be those underlying platforms which will support a lot of much more local, much more nimble consumer-facing companies. So a little bit like Andy, we are increasingly seeing ourselves as being supporters of the picks and shovels crew. Mm-hmm. So essentially people who provide the materials and provide the product, provide the technology to many, many, many players.
Mm-hmm. Thanks for that, Zamat. Really great insight. And maybe shifting gear a little bit to AgTech, we do have a question from the audience, from Raman. So his question is, are there commercial AgTech models that are serving smallholder farmers while building profitable businesses? So Andy, if you don't mind, I will start this with you.
Sure. Well, we've looked at some. At this point, we haven't invested in any. I would say in the U.S., most of the farms clearly aren't smallhold, which is where we spend most of our time. But I do think that accessing equipment, tractors, other devices that can make smallhold farms more efficient is where I think there's an opportunity to either provide equipment, not that a smallhold farmer would necessarily buy it, but lease it or use it for the day, rental equipment. I mean, Uber for tractors. We've seen several startups in Africa, and I think even in India now, that are developing companies to do that. And I think you're going to see new ways, novel ways to provide these farmers with access to equipment that they probably couldn't have gotten so far because you just didn't have these types of models. So I think Uber for tractors, Uber for equipment like this for smallhold will happen. And it's an area we're staying pretty close to, and we expect that, we hope that there will be opportunities going forward for our fund to invest, because we are now, initially we were in the US, North America as a fund, and we are beginning to expand our horizons and looking at regions outside, whether it's South America, Africa, and now even India, and hopefully China. So.
Mm-hmm. Anuj, I know you guys are investing around the globe, and you must be seeing a lot of interesting opportunities from different regions. And maybe just on that question, as an extension, I'm curious, specifically India and China both have a lot of smallholder farmers. Are you seeing interesting opportunities emerging from this region? And another question that I have for you is that which of these regions are you seeing most innovation taking place?
So Preston, talking about smallholder farmers, I think this has been an area which has been difficult to crack for many investors, because inherently farmers don't like to change and don't have paying power and so on and so forth. But we are seeing in the last 2 years quite a lot of interesting business models and technologies that are coming in, which are changing that paradigm. And the good thing with smallholder farmers is that the numbers game is very high. So per farmer, the purchasing power is probably low, but as a collective, it's quite interesting. So let me just give you some examples of companies that we have invested in. We've invested in a drone company in China called EA Vision, along with Bits and Bytes, which is one of our investee funds. And it's a fascinating company, but other drone companies in China too are all doing a great job of producing products that suit local farmers. Of course, the Chinese government is heavily supporting those companies, but the proliferation of drones in China is huge, and I think China will lead the way to teach the rest of the smallholder community on how to use drones and to use drones in not just from a surveillance perspective and data perspective, but actually to spray pesticides and detect various diseases going forward. Similarly, in India, as well as in Southeast Asia, we are seeing some of these digital platforms come up, which have shown great ability to scale, and some of these companies are showing very good unit economics. One of the companies we are being investors in, Star Agri-Bazaar in India, was profitable last year. It did $2 billion worth of transactions in India, which is huge for a fairly small fee, but $2 billion of transaction in a market like India is a fairly large number. There are some interesting companies in Indonesia like e-fisheries, which are dealing with smallholder fish farmers, selling them feed through an IoT device, and are very interesting companies with strong business models around that. So really, there is a lot of innovation that's happening, and it's very heartening to see, because these are really the kind of companies that we want to invest in. As far as the innovation, where it's coming from, look, I'm very bullish on China, simply because with the strength of innovation that China has, and the mindset that folks have in terms of building companies, and all these highly educated, Chinese young graduates who are graduating from universities in the US or from China, coming back, starting companies. China is going to really create some very, very interesting companies, both in terms of innovation of products, but also innovation in business model. And we don't need to go too far, but to see what Pinduoduo itself has done is very interesting. And so have many other companies which are in your league as well. So China will be a hotbed of innovation. China has been late in the agri-food tech game, partly because there's so much innovation happening in other parts of the ecosystem. But I'm very optimistic on China, and we are very optimistic on China. India is also going to continue to be an area where development is going to happen. We're seeing quite a lot of interesting digital platforms coming out of India. So we continue to track those and potentially consider investing in some of those as we go on. The smallholder world is tougher, because it's very contextual to a local country. So you have to study the business models, and one business model that applies in one country might not apply in another country.
Preston, just one additional comment for me, if I might. I think one specific area that we've seen is the application of fintech technologies more broadly, in part because smallhold farmers have been relying on the larger companies to provide financing. Input companies all around the world do that for the farmers, but they do it at rates which are pretty high. And I think there are ways to provide solutions, credit, lending, as this digital platforms emerge. And so that's going to, I think, expand around the world. We've seen that in South America, starting to see that in Africa, and I think that'll grow. Thank you.
All right. Thank you, Andy. Thank you, Anuj. I was told that I still have another 5 minutes or so left, so I want to, being the last panel of the forum, I want to leave people and participants with some smart words of advice. So I'm gonna tap into your secret sauce, right? So I think everyone in the panel would want to know, where are the smart money going? What are you spending time on? So my last question is that maybe if you can share with us, what are the potential, or what are the pockets of opportunities that are currently being overlooked? And if you were to your big money into that sector, what that sector would be? So maybe I'll start with Przemek.
Wow. Okay. So in terms of personal excitement and personal preferences at this stage, I think some of the most exciting things I've seen recently are in the precision fermentation space. It is, and this is a sneak link to your previous question, it is mind-blowing what we can by now produce here using biological means, and how quickly it progresses, because the cost of gene reading and writing is just collapsing. And so things that were complete science fiction 5 years ago are just doable today. We're seeing kind of Moore's law type of or exponential evolution. So I think we will see immense progress both on the food and non-food side. And this is where we are spending a lot of our time, using the same underlying technology for developing foods, for developing ingredients for pharmaceuticals, for stuff outside of the food sector as well, but it's the same underlying science and technology. Now, the key bottleneck in this whole space is the scale up. So when you look on the fermentation tech, we kind of have the very established pharma aspect, where the volumes are very small. There's frankly no cost sensitivity as far as I can tell, because the end product costs $10,000 per kilo. So you can literally gold plate the reactor and still fine. And then you have beer. which is arguably a very different type of fermentation, although a very large scale fermentation, but it's not aseptic and it's not fully controlled, etc. There's a valley of death in the middle. And so what I would like to see, and what I would certainly like to invest, are people who are helping those very exciting precision fermentation players scale and bring down the cost of the technology, to bring new talent, because part of the constraint is just the human talent available, and help those companies scale and reach profitability, not in 7 or 10 years, but in 2 to 3 years.
Mm-hmm. Andy?
Well, you stole our area of interest, and it gets back to the picks and shovels area, because it's definitely going to be driven by fermentation in large measure. I mean, SynBio, that's been applied to a number of areas, is going to grow. Cell-based approaches are definitely going to be part of the solutions for providing production for food. So we're aligned there for sure. Other areas of interest, water. You're not going to produce water, but I do think recently in the United States, definitely around the world, people are focusing more on water. It used to be a free good. People thought, I turn the tap, there's water, I don't have to pay for it, and I can use it for irrigation to grow my plants. That's changing. People are buying farmland right now in the US and in the Western world, in California, not for the land value for its ability to grow almonds or pistachios, but for what's underground. And that's going to get to be a bigger issue, I think, certainly in the US and around the world. And technologies to desalinate locally, to mitigate water use, we think are going to be important drivers and opportunities for growth. And then the last area that we're interested in is aquaculture. I mean, I think as everyone knows, you're going to be fishing, at least in the seas. You won't have supply, whether it's plankton or the sources for the population. And so land-based solutions to fish farming are coming, and it's an area clearly that we're very interested in as well. So those are three, but please don't tell anyone. It's just between us.
All right. I know we are running late, but I'm sure audience can't wait to hear what Temasek is thinking about this. Anuj.
Preston, so I'm going to repeat what's already been said. These are very interesting areas. I add controlled environmental agriculture as another area that we believe in. With climate change, changing environmental conditions, labor issues, highly automated agricultural farm or aquacultural farms are going to be part of the future. And we're going to see that in Asia, by the way, very, very quickly, especially in China. Berries and fruits and tomatoes and so on and so forth grown in greenhouses and highly automated greenhouses, which use technology such as automation, will be something definitely part of the future. And then the other one is just digital platforms, right? Agriculture and food is an area which has generally been untouched by the digital revolution. We're seeing investments like Farmers Business Network, Agribazaar, others that we have done in our investments take off after COVID, and a resilient supply chain will probably also be a digital supply chain. So those are also the areas that we continue to be focused on, besides the others that were mentioned by the other panelists.
All right, thank you so much. Well, audience, you know what to do. You got a wise word from the best. Well, Andy, Anuj, and Przemek, thank you so much for joining us. I can't wait to hear more great results from you guys, and can't wait to see the impact you and your companies are making. Thank you so much.
Thank you.
Thanks, Preston.
Thank you very much.